Welcome to Unlayered, the show where we talk about next generation blockchains. I'm your host, Dave, and this week we're joined by Sunny Shi. Sunny is previously a TradFi research analyst at a long-only hedge fund, and now works for Messari doing various research reports. And the reason actually we've got him on this week is because he's just done a recent report on HyperLiquid, the largest Perp Dex in crypto. So firstly, your background is more sort of on the TradFi front. So, I mean, do you want to talk a bit more about that and then how you've come over to crypto?
Yeah, sure. So I graduated in 2020, and in college, I basically knew immediately that I wanted to do something with the public markets. I just really liked how everything moved. I liked the nature of the work. I was very interested in equities at the time. And so, basically interned at a local hedge fund in Boston, fairly small, doing a long only equity strat, Buffett style, quality / value oriented. Sorry about that. But I think 2020, 2021 or so, a lot of people my age, that's when we really onboarded into crypto. And, similarly, I think there was just so much going on. And my friend had been sending me stuff basically saying, hey, look, you need to look into what's happening here. And so I jumped right into DeFi, skipped a Bitcoin white paper, skipped the Ethereum white paper, went back and read them, of course, but really got into it when things were probably peak crazy. And just haven't stopped really thinking about crypto since. And so I think this year, Messari had always been a research institution that I respected. It was the first newsletter I subscribed to. I was a big fan of what Selkis had done in the past. And so it was a no-brainer for me when they were hiring research analysts. And I thought, I should just take this leap now. And it's been great so far.
Awesome. Yeah, congrats on getting the job. Just talking about the insanity of 2020, 2021. I mean, I saw a video on my timeline earlier with Crypto Bitlord. I think he was annoyed at having got liquidated again, and he started setting fire to his apartment. I missed this at the time, but I mean, it's pouring petrol everywhere, setting fire to it. I mean, different times. I don't think we've seen the likes of that this cycle, unfortunately.
I would have loved to work at Messari back then. I mean, things are great now, but yeah, I don't know if we'll ever get back to 2021 crypto mania.
Well, because I got in 2017, so I'd have loved to have been in maybe in that bear market afterwards when everyone had given up hope. And yet, if you were really paying attention, you could see all of those DeFi platforms blossoming. Because also back then, there was the existential crisis about what's crypto even good for. And I think it would be really helpful to be deep into the research, speaking to sort of titans of the industry.
Yeah, I think that's sort of where we are now. I mean, not in the sense of crypto. I certainly think the uncertainty is less harsh. I think we've seen a couple of things that crypto has delivered, find product market fit. There are certainly things that as a researcher I can write about. But there certainly is a lot of like existentialism and nihilism happening on my timeline. I don't know if it's just me. But yeah, maybe I think that that's probably a good thing right now. I think the crypto community, as users, I think people are just demanding more from projects. And so I think the BS meter, the BS radar is pretty high. And I think as a result of that, we'll probably see some of the best applications come out this cycle or this year, or things that are brewing right now. And HyperLiquid, I think, is potentially one of them.
Actually did a good tweet recently about apps that you think have reached product market fit this cycle. And when you look down the list, you can sort of see why it's a bit nihilistic, because you've got Hyperliquids, you've got Pump.fun, you've got trading bots, you've got Telegram mini apps, which are just tapping the phone and earning points, which, may or may not be worth anything. It's a fairly dull list, and it's not really going to drive the world forward. It's not really going to bring new entrants into crypto. I think that's been a large part of it. There's not been this sort of grand futuristic thinking to date. I think maybe Deepend kind of feels like the strongest narrative this cycle for something which could actually draw new people in.
Yeah, I don't know if... Look, I think when I was coming up with that list, it was really just looking at anything that was either onboarding users at a rate that we haven't seen before, or generating fees and activity in a way that we haven't seen from other applications that are new this cycle. I mean, obviously there are other things that have found product market fit, Bitcoin, stable coins. I got a couple of cheeky replies saying that, but I was referring to things that were on their way potentially to finding product market fit. And look, I think if crypto is all about trading and swapping, I think there's value proposition there. I mean, I think I put out a tweet recently. It was after the yen carry unwind situation when Bitcoin touched the low 50s. And, I think during that period, just because I've been a little bit behind the curtains of how TradFi operates, and people aren't not transacting. I mean, the markets are closed, but people are buying and selling OTC. Institutions are trading, they're offloading risk. And, as the average user, you just didn't get access to that. And then when the markets opened on Monday, within a few hours, I think every single major brokerage was halted. And so if our PMF going forward is just centered around trading and swapping assets, doing it permissionlessly, doing it 24/7, trusting that the protocol that you're trading on isn't just going to halt or freeze your funds or stop during periods of high volatility, I think that's a great use case. I do want a little bit more. I think DPIN certainly has that flashy tagline. And Dylan Bain, one of my fellow analysts here at Messari, super jazzed up about DPIN. Messari has always been very bullish on DPIN, but yeah, I think I've always liked to focus on DeFi just because I think there are plenty of applications here that could, potentially present better alternatives than what we have in TradFi, and that's a pretty sizable market. So that's where I've spent most of my time.
Do you think that we need to bring on equity before that's actually going to sort of make a huge difference, a huge dent? Or, I don't know, or do you envisage maybe companies starting to launch on liquid tokens on the blockchain?
I don't think that will happen. I think there'll be derivatives that let you get exposure, probably. But there's just a lot right now for that to come on chain. I am very, very bullish on the idea of it coming on chain. I think there are, tons of people around the world. I'm from New York, I'm from the States. And so here it's very easy to download Robinhood, set up a brokerage account with a social security number, and just really buy anything that you want. Super easy to get access to the US dollar. But I think that that's just not true for the rest of the world. But I think actually bringing equities on chain, I'm not sure we can get there, at least in the near future. But I would be very, very bullish on that happening if it did. But I think all sorts of derivatives, all sorts of perps, perpetual products, certainly make sense on chain. And we're seeing with Polymarket that there are other things that you can tokenize and trade and speculate on chain that we don't have in the TradFi markets. And so I think there's a lot of
how do you see the perps coming on chain? Do you think it's in the form of fully decentralized, permissionless exchanges, and they flout the US securities rules, or do you think that we need regulation to change before we can see that sort of massive growth in DeFi?
It is very regulatory driven. I think it's very hard. I'm sure there are tons of institutions that would be happy to create some sort of product on chain, where you can either, maybe you can, I'm sure BlackRock would love to allow people on chain to speculate on the S&P 500 index or the NASDAQ. Maybe you can even make that composable with the rest of DeFi. Maybe if I want to get a loan, I can post my tokenized S&P 500 shares as collateral. I mean, that would be crypto utopia. But certainly, I think there's a lot of regulatory boundaries presenting that from at the very moment. But it's definitely fun to think about.
Yeah. Yeah. I mean, I often think that there is a chance that we're not going to see a sort of outrageous bull market until regulations start to move more in favor of crypto. And obviously, it's good that we've got the very large super PAC in support of crypto. So we'll see what the next few years and the next presidency brings us, I suppose. So moving things over to Hyperliquid, which is, as I said, the main reason we wanted to bring you on for today's chat. So, I mean, high level, do you have any thoughts on why you think Hyperliquid has been super successful this cycle? I think it does more trading volume than all the other perps combined. What is it about Hyperliquid that has really drawn people to the app?
Well, I think there's HyperLiquid, the product, which for now, I mean, their main product is just the Perp Dex. And it's the best product in the space. People who I know that trade perps frequently, I am not one of those people, but people that I know who do. I think a couple of them onboarded onto Hyperliquid because of the ongoing points program. That's certainly been a factor. It would be, probably false to say that it hasn't. But it's just a great experience, and I've used it plenty of times now. It's my main venue for trading perps. And that's a testament, I think, to what the team has built, optimizing for the end user, optimizing for market makers. It's highly liquid, testament to the name. But I think if you just go back to when they launched, I mean, it was probably small iterations here and there, making it so that your wallet was connected frequently, so you didn't have to sign for as many transactions. Shipping new perps products. High perps was something that they launched that let you basically speculate on tokens before TGE. Allowing for different order types. Just a bunch of small things that over time built up to a really, really solid UI UX. And when people were posting screenshots of Hyperliquid orders, I didn't know where that was coming from. I thought it was some sort of centralized exchange. But I think it's just, one of the best products in crypto. And trading perps is certainly one of the few things that crypto is really known for. And so that's the first thing. I think at this point, the reason that I wrote the report and the reason why I've been so fixated on Hyperliquid, and I think why, people on CT and others have started to take notice, is it's really, really hard to describe to you what Hyperliquid is today in one sentence or even a few sentences. I think the on-chain Binance moniker has kind of stuck. But there's really no good comparison for it. You can't really put it into a box. Like, is it an alt layer 1? Is it just a Perp Dex? Is it some sort of parallelized EVM? It's really hard to understand what Hyperliquid is becoming. And I think it's fluid. So that's why I was initially intrigued. It was like, okay, what is going on? They have this HLP vault. They have perps fully on chain. They're launching a spot market, or the spot market is already live. Now third-party protocols are talking about building on their layer 1. And so what even is this thing at this point? And I think that's incredibly bullish. I think when we can't pin down a specific narrative, it typically indicates that maybe you've got some sort of new primitive forming. And so I'm just really excited to see what happens from here.
I always try to keep my feet on the ground when people start gushing about new primitives in crypto. So, I try to maintain some healthy skepticism, but undoubtedly it is hugely, hugely popular, and it's definitely done something right. You say in terms of comparisons, there's nothing completely obvious, but it seems to me something like DYDX, which I believe hasn't launched yet, so that's probably why we can't make that comparison. But obviously they have left an Ethereum L2 when they weren't very scalable, and moved to do their own Cosmos chain. So they will be effectively an L1. So do you think that DYDX has let the lead slip and is not going to be able to compete with Hyperliquid? Do you think Hyperliquid has done certain things in a more strategically intelligent way than them?
Yeah, I think there's probably two things. The first is just the practical angle of why users are choosing Hyperliquid, which is Hyperliquid has more liquidity. They have a better user experience. They've got a strong community. The team has been shipping incredibly fast. I think if you look at when HyperLiquid really started to onboard users and TVL and trading activity, the other perp dexes had kind of gotten stale at that point. I think there wasn't too much new happening. There wasn't really anything innovative happening. I think, at the time you were also seeing points programs ending. DYDX was also shifting to this app chain, this Cosmos SDK. And, people weren't sure exactly what that meant. And so I think practically, it's just this new product came along that was really, really easy to use, provided really, really solid liquidity, and had this strong community that was constantly advertising it on CT. And so I think that's a practical answer. I think more philosophically, it's why do we want to build a perp dex that's fully on chain, right? And if I'm not mistaken, I think DYDX today still uses a hybrid approach where the order book and matching engine are off chain. And does that really add value in terms of what we can deliver on crypto through crypto rails? And I think that users will still use DYDX. They're used to it. There's plenty of people I know who still use DYDX. I think DYDX is a great project. And certainly there's that aspect of being, decentralized, on-chain. It's easy to bridge assets on and off. You can use your wallet. But HyperLiquid, I think by building everything from the ground up, from the consensus, they were on Tendermint as well for a while until they realized that it wasn't going to work for them. So building their own consensus algorithm, building a native bridge, building the entire order book on chain. I think it's something that's really, really hard to do. And I think it's, philosophically speaking, the direction that perps dexes and exchanges in general will probably head towards, which was, hey, we can build a perps dex on chain and give you the best user experience on chain as well. Like, it doesn't need to be a trade-off. It just takes a lot of work. And so I think that is something that I really admire about the direction HyperLiquid has taken. And it's not new anymore. I think there are plenty of, Drift, for example, is also fully on chain. And certainly there will be more fully on chain perp dexes, but I think at the time it was really, really cool.
So let's tease more into this decentralization topic, because it is one of the negatives that often gets touted to HyperLiquid. When you compare it to Drift, which I agree, I think is fully on chain. Obviously, Drift is an application on Solana, which has X hundred or X thousand nodes, validators, sequencing all of the transactions. So it is a decentralized blockchain that it sits upon. Obviously, this is an L1, so it's an entirely different beast. They're relying upon those validators, and as I understand it, there's maybe 4 or 5 at the moment, all of them controlled by the team. However, as you say, there is an on-chain order book, and you can sort of see everything that is happening. It's all permissionless. So I suppose the question is, what are the decentralization properties which are required for perp dexes, do you think, in the end game? And do you think HyperLiquid has chosen the correct ones, or do you think that they're losing out by not going a different route?
Yeah, I think this I always find this conversation very strange. And I think it's a testament to how well HyperLiquid has done onboarding users and activity. Because when people start calling for you to decentralize more, it's usually a pretty good sign that you're at least somewhat of a reputable protocol that's doing something real. And so that's the first thing. I think the second thing is what's always been so strange about this debate for me is, you have I think crypto likes to say that decentralization is a spectrum, centralization is a spectrum. But a lot of people don't actually behave like it is. And so you have, obviously, your super centralized institution, your Robinhood, that's selling order flow, that's halting your trading activity. Very, very evil. We all agree. And then it seems like on the other end, it's like everything needs to be Ethereum. And I think there are plenty of ways that crypto can add value in between. And so I think the first thing, let's just assume that at this point, HyperLiquid doesn't decentralize further, which, it's been made very apparent that that's on the roadmap. Doing what they've done, building an order book fully on chain, building the HLP vault, democratizing market making, running a fully transparent order book. I think those are all things that are incredibly commendable, that bring a lot of value, and should be worth noting. I think if you look at DYDX, for example, right? Again, this goes back to the philosophy of why you would even want to have a perp dex or an exchange in general on chain, which is, there's been reports that FTX might have been front running users, might have been front running their order flow. There's been plenty of reports that Robinhood sells order flow on a pretty habitual basis. Having an order book off chain just means that there is always the risk that the people running that order book can do whatever they want with it. And with HyperLiquid, that's not the case. Every single order follows a strict time order rule case. You can see all the transactions happening. Right now, they've launched read-only validator nodes, which aren't full nodes in the testnet. But, you can authenticate everything that HyperLiquid is saying is happening on chain. And I think that in and of itself is already a pretty solid value proposition. But I think, it's also incredibly early. I think HyperLiquid runs like multiple updates a week. And Ethereum maybe does that, maybe does one serious state update like every few months. And so, you do need a certain degree of centralization in the early stages if you want to ship at that pace. It will also help performance on the network, having less validation. But I think going forward, it's been made very clear that decentralization is something that they want to work on. And we don't even have a token live yet, so it's really hard to run full validator nodes without a token. So we're not even there yet. And I think ultimately, as HyperLiquid moves from where it is today to something more decentralized, I think we should commend them on what they've built already. And maybe, wait and see on what they do with decentralizing the validator set. But two, I think the users will decide. I think if the users care about having their perp stacks, fully decentralized, they'll wait until HyperLiquid gets there. If you don't care, you just want, the best place, the best venue to trade perps on chain, then you're going to go there now. And so, the first thing is, I think it's silly to say that HyperLiquid hasn't added value or is not a valid crypto protocol because it's not fully decentralized. I think it'll get there over time. And I also think that, users will end up doing what users do. And so it's basically a work in progress.
Yeah, I like what you said about people only really care about it not being 100% decentralized when it actually starts doing well. And as a Solana fan for the last few years, I've certainly been privy to that as well. And I do also think because Bitcoin was the first asset and then Ethereum sort of followed after it, and they both needed a very heavy skew on all of the properties of decentralization. There's just been this sort of blanket approach to projects ever since. And I think this cycle really has been the first time where people have started to question, well, does it actually need all of the properties in order to be the best product possible? And I think certainly in the case of Perp's exchange, it's not necessarily the case, because ultimately you need market makers to get on there, and they will then bring users, and the market makers, they can't spend $1 per transaction for sure. They can't wait 12 seconds for a block, things like this. It's just not possible. So you have to get the latency down as little as possible, and then the cost as well. So on the costs, actually, is it gasless? Did I see on your report? Do you know how they can make a blockchain gasless?
Yeah, I mean, they own the infrastructure layer, and so basically any transaction that's not inflating state bloat is gasless. And so transactions are not really adding anything to the state. And so they've made it gasless. Trading spot is gasless. Trading perps is gasless. I'm not sure if that will change with the incoming EVM. I'll need to check on that. But I know right now the trading experience is gasless. You do pay trading fees, which mostly go to market makers. But yeah, I mean, that's just an example of something that you wouldn't be able to do on a general purpose blockchain. I think if you're a market maker submitting thousands of orders, posting thousands of limit orders within a very concentrated time window, I mean, the first thing is you don't want to pay gas on all of those orders. That's just going to lead to worse execution for the end user, having to basically widen your spread to make up for those gas costs. And two, you want to be able to cancel your orders when they get stale for free. And that's just, not very easy to do on a general purpose blockchain like Solana or Ethereum. And so, sorry, there's like a super loud siren. Where was I? Let me finish my train of thought. Forget where I was. That just completely threw me off. I thought someone was playing like, oh yeah. So the gasless thing that's one thing, but also, just basic things like atomic liquidations, funding distributions, on a set time interval. I think those are all things that are just a lot easier to do on an alt layer 1 or an app chain. And to keep, I think one thing that I always need to remind myself when I'm like thinking about HyperLiquid is that Jeff and a lot of the core contributors on the team, they were high frequency traders before this. They weren't really crypto builders at first. They really picked up that side of the business after they had started. And so, they're building everything with trading first in mind, optimizing for traders, optimizing for market makers. And so does the average user care about a couple of bips of better execution or a couple of milliseconds of better latency? For the most part, probably not. But I think if you're a cream of the crop market maker or a trader, and you want to be trading things on chain, HyperLiquid is the way to go. And I think app chains and alt layer 1s in general are probably the direction that we want to take. I mean, someone's not going to hold themselves up over having to bridge to be able to access, X% better execution, better liquidity on every single transaction and not have to pay gas when you're market making. I mean, those are huge value adds. So yeah, I think that's important to keep in mind.
I'm still trying to get my head around it a little bit, because the way that I see it is they can only offer no gas as long as they don't have a permissionless validator set. And even if they'd had a permission validator set and they brought in, 20, 100 entities, whatever, of people they trust, if it remains gasless, surely they have to be making the money elsewhere. They're not just going to sort of give the money away for free. So it's just trying to work out, how to avoid really the incentives for these insider validators to try and make money in maybe an underhand way, if that's possible, if they're not receiving money for validating the transactions.
Yeah, there are actually, you do have to pay gas on the network. You pay gas when you seed a new wallet. You pay gas if you want to list a new token. You pay gas if you're a protocol and you want to build an application that does certain things. And so anything that's, significantly increasing the state on the network, you have to pay gas for. So there are gas costs associated with using the network. It's just for their perp dex and for their spot market that currently isn't the case. Again, I don't know if this is going to apply to what happens post EVM. But yeah, I think it's just one of those trade-offs where, yeah, you'll probably have less total gas costs that could end up trickling back down to a validator set. But also, what's the trade-off here? And that's, hey, really, really cheap trading experience for traders and market makers who care about it.
Yeah, I mean, I completely agree. I think they have taken the right approach, and I'm just wondering if in the end state this is like the best setup, because again, if you did want to start increasing that validator set, likely it is that the latency goes up, And as I say, I'm struggling to imagine a world where you don't have to start introducing some fees for all the trading because like, work is still being done by somebody. So, I wonder if this is sort of the optimal long-term architecture. And I'm definitely not someone that everything has to be 100% decentralized. I think it should apply to the use case. So, it's an interesting approach, and happy to sort of see how it goes on from there. How about it being an app chain on itself? Because often it's said, so Kyle Samani, certainly from Multicoin, he's a big proponent of this, that maybe one of the only few use cases which make sense as an app chain are Perp Dexes. But as soon as you start introducing like spot, then so for Perp Dexes, you can just transfer over USDC, and they're all derivatives, so you don't actually need the actual underlying assets. As soon as you do spot trading, then you do need the underlying assets, and so therefore you have to transfer all of those assets onto the chain. And I believe that their spot trading is, in your report, you said about 25 million TVL, I think. So it's obviously a lot less than the Perp side. And do you think that that is a barrier that's going to be difficult to overcome because they're an app chain?
So I think the main thing about an app chain focused on a Perp DEX like DYDX and what HyperLiquid is trying to do, and this goes back to what I was saying earlier about no one really knows what HyperLiquid is, right? Is they're building out, more of a full-fledged layer one. But I don't think it is their intention, nor do I think it should head this way. For HyperLiquid being like a full general purpose blockchain. Like people have made comps to Solana. Like I don't think it should be Solana. That would ruin the whole purpose of what they're trying to do. And so having this very specific L1, that's more than an app chain, but also has, protocols that have been curated to either be composable with the order book if that's something that they value, or really just offer really, really high quality trading services that builds off HyperLiquid's architecture. Uses HyperLiquid's native Oracle. They could use their native spot market. They could use a composable on-chain order book. I mean, all of these things are super new. And so I don't even like calling HyperLiquid an app chain because it's like, what is it trying to do? And so the spot market right now is very, very new. It's really, really interesting. They've got a couple of features on there that I haven't seen anywhere else. The first is HIP2, which is native liquidity. And so, you plug into their order book as a protocol trying to list a token. And if you're just trying to launch a token, you don't actually have to seed liquidity. There's native liquidity built into the spot market, which I think is super interesting. And two, it's a permissionless auction process, but there's only a certain number of spot tokens that are allowed to get listed on HyperLiquid. And so, like, let's say, I think it's like one token listing every 30 hours or so. So that's less than a token a day. So that's something really interesting. Again, going back to this like super curated, high quality trading L1. If you go on Solana, you try to buy a meme that, I don't know, maybe Trump said something funny and you're trying to buy it. There's already like 25 different things that you can buy. And that's not a problem for Solana, obviously. But, for HyperLiquid, I think curation here is something that's unique to their ecosystem. And I'm excited to see how that pans out. We have an analyst here, Justin Baba, who has talked about this a ton. But, if HyperLiquid ends up growing to some immense size and delivers enormous value, and there's just all sorts of on-chain trading activity happening on HyperLiquid, how much would you pay to list on Binance? And so I think going back to like where those fees come from to pay validator sets, I think that's potentially a source of revenue for the layer one. But I'm curious to see how it plays out. At this point, I'm not sure what happens. I think I agree with Kyle Samani. I think having a Perp DEX on an app chain is probably the better solution. But also, this could be something between an app chain and a general purpose layer one. And yeah, I mean, I don't really know how that's going to go. Like, I'm very excited to see what happens. I don't even think that the team expected for this to happen until recently.
Yeah, it is very interesting, this curation list. And is that just for spot or is that for perps markets? This curated 30-hour list.
Um, I don't think that perps are permissionless to list. Or I'm not sure. I think the team has launched perp products, but for the spot market, it's certainly the case where, if you want to launch a ticker, you have to outbid everybody else for that 30-day period. Um, and I think the team has mentioned maybe in the future they create some sort of a separate permissioned path for like real protocols that want to build on HyperLiquid. But yeah, I'm not sure. I mean, we have an analyst here working on Ronin, which is a gaming chain. I believe it's a layer one, and they're specifically bringing in applications and gaming protocols that they think are going to add value to their network. And so filtering out the noise, extremely high quality applications. We're going to focus on a specific vertical. That's something that I think HyperLiquid is building towards at this point. But yeah, it's fun to speculate about, but there's currently just not much to go off of. As you said, I think the spot TVL is pretty low in comparison.
Yeah. But no, it'll be interesting to see how that curation list goes. Because I definitely agree it's good to have just quality assets. But at the same time, firstly, I think for meme coins, I do think that you miss out maybe on the virality if you're then having to compete for a spot 30 hours. So whilst you can have meme coins, you can't like tap into the here and now, basically, of what's going on. But I think it's a very interesting concept. The other point I'd make is I kind of think that the best apps in crypto have generally been ones where it is completely permissionless to start up trading pairs as you have on Uniswap. And I know for example, on prediction markets, I'd love to see those start to become permissionless to create markets on prediction markets. There's obviously always nags that you have to get through and make sure that there's no manipulation going on, but I'm generally of the view that a permissionless approach to things will generally prosper in the end. But yeah, it's very interesting and novel, and yeah, see how it turns out. Do you know how it's gone so far? I believe there were some that were definitely paying quite a bit of money, maybe a month or two ago.
Yeah, I think some have hit the six figures. I should say that listing a token is permissionless. You just have to outbid everybody else. But theoretically, anybody could launch any token. But yeah, no, there was a certain point when the spot market was running a little bit hotter, where I think auction prices were in the six-figure range. And so you can imagine how wild that gets if HyperLiquid really does, or if the spot market on HyperLiquid really starts taking off. And I think there'll just be some natural leakage from perps traders going like, oh, like what's going on over there in the HyperLiquid spot market land. But right now it's mostly, I would say like HyperLiquid maxis, speculating on, mostly a few token tickers. So yeah, it definitely remains to be seen what becomes of the spot market. But I think the team has treated it like sort of an experiment.
And I think one of the other great things about this project is no VCs. It's almost become like the Bitcoin 21 million. Like there is this aura around the project because there's no VC money that's gone in. And I believe that the team hasn't even been making money to date. So it really is just going to be tokens for the team and tokens for the users. Jupiter as well has done something similar. So yeah, I think that's going to be a massive tailwind as well for the project. How do you see the token launch going when it does happen?
Yeah, I think I don't know what it is about like no VC backed teams. There have been multiple times where I stumble into a protocol and I'm just like, I love this protocol, I love this team, and then I find out like down the line that they didn't take any VC money. So maybe it's either the no VC aura or these founders just naturally have aura because something about them is appealing to me. Aerodrome, I think I just released a report, at least as of recording, this morning on Aerodrome. I think they also didn't take any venture money. And yeah, like right now, I almost want this token launch to happen for the team. Like, I don't know, I'm hurting just looking at them put in this much work and not getting paid. But I think that Jeff, I heard somewhere that they like basically a lot of them ended up putting money into the HLP vault, which, kudos to you. If you want to make money, at least do it like how any of your users would, if you really believe in the project. And so right now, I think that has been a source of at least personal gain for them. But yeah, so far, like no VCs, I think less than like 10 contributors. I don't think this team is very big. And so we've seen a lot of TGs this year. I talked about a few in my report where, I think the public reception was just very, very negative. And that's because like as a project, I don't think any project goes out there and thinks, look, I want this token launch to suck. Like I want my community to be ticked off. I want nobody to get this token. But when you have a whole bunch of contributors, when you have large investors, there's just going to be like a certain level of internal pressure that limits what you can do for the community. And a lot of times the community ends up getting shafted. And it remains to be seen what happens with the HyperLiquid TGE. I'm not here to predict exactly what happens. I think in my report, I gave sort of a wide valuation range of what potential point values could be. But I mean, right now the setup looks pretty interesting. I mean, you have basically the tokens that are going to go to the team. I don't know if they'll be vested. I mean, I imagine a portion would be. The tokens that are going to go to future validators. And then really, like, there's a wide range of what this airdrop could end up looking like for the community. And that's gotten the community pretty riled up. I don't know how into the HyperLiquid lore you are, but, 800 points crypto Adair, I think, has sparked up some fun conversations about what the point valuations could be. I've certainly had my take. So, I think it'll be a fun one. I think it could surprise a lot of people. And also, I think there's a lot of capital that's sidelined that doesn't have exposure to HyperLiquid, but maybe love what they're doing. And so liquid funds, venture capital firms, people who would have gladly invested in HyperLiquid, I'm sure, at a very, very large valuation, right now just have zero exposure. And so what happens to that capital when there's an actual token live? Who knows? And so, I'm very excited about TGE. I'm hoping that it could be maybe a reversal of the trend here of just down only TGEs. But yeah, I have no idea. This is not financial advice.
Yeah, fingers crossed. It's a reversal. I actually did a tweet during the week. It's a fairly well-worn argument now, but I was looking at Camino and Margin.fi on Solana, and at one point, Camino had maybe 1/10 of the TVL of Margin.fi, and eventually they did an airdrop, and it was good, and people got like decent money, maybe not life-changing, but pretty solid money. But if they'd just been given the opportunity to actually invest in those tokens when it was 1/10 the value of Margin.fi, then they were likely to get a sort of 10, 20x as it sort of beat out that competitor. And it's just a shame that this cycle we're not having more opportunities like that where we can actually ride the token up, create evangelists for the project, rather than here we find ourselves again, everyone's farming the same project, hoping that it's going to be a good airdrop. And I really sincerely hope it will be a good airdrop for a lot of people.
Yeah, and again, I have no idea what this thing is going to trade at. I don't know if it's going to be up or down. I don't even know what comps to use, to be honest. Again, going back to HyperLiquid potentially being a new primitive, it's just really hard to pin down what to value this thing against. And so there have been the loftiest of expectations. There have been, very bearish expectations for TGE. But I think one thing that that I like about just the HyperLiquid narrative set, like not even talking about prices for a second, is there just hasn't been a lot of things to buy this cycle. Like there's been, if you're a liquid fund, I mean, what are you buying? Like maybe you're buying MakerDAO, maybe you're buying Ton, maybe you're buying Solana. But what are the assets that you can actually buy in relative size that you can build like an investment memo around? And you've seen like a pretty eyebrow-raising investment in Drift by a certain VC, and you know, I don't know what the intentions were there. I'm a big fan of the Drift team, but I think it's like, what do people even have to buy in DeFi nowadays? And I think even this DeFi 1.0 narrative that's coming back is a function of there being just no new interesting DeFi tokens to buy. So let's just revisit the old stuff because they're still doing well. And they are doing well. But what happens when you actually get a DeFi launch that's doing something new, that is a real product that, as you said, is the highest traded, or is the most, is doing the highest amount of trading volumes right now in the Perp Dex space, that also has a layer one, that's put in the work to build their own consensus, to build a lot of the tools that they use today. And so I think a lot of the hard work is already done. Like what happens when that token goes live? I don't know, but I think a narrative is set up very well for more attention, at least, to be paid to this project in a point of the cycle where we're all kind of desperate for stories to latch onto.
Yeah, because the examples there that you came up with, they all started last cycle, basically. So, as you say, if you actually have to write an investment memo around something which had launched this cycle, I think you're really struggling, because the few apps with product market fit which have launched this cycle don't have tokens, which again comes to exactly the same issue that we keep talking about. You mentioned Drift, and it sounded quite spicy, so I just wanted to push on that button a little bit more. But I mean, do you think so? Obviously, Drift, it's on Solana, which is fast, but the latency is limited by the laws of physics, and it's at 400 milliseconds roughly. It could get down to maybe 200 milliseconds, but Binance is 15 milliseconds. Some of these sort of L2s, some of these new Perp Dexes are lower than that. They're 5 milliseconds or less. So you really can't do on a general purpose L1 what can be produced on these new examples. So are you sort of perma negative on something like Drift, or do you think it serves a different purpose because of its atomic composability on L1?
I don't know much about the composability thesis. I did read the memo. Look, I think Drift's value is going to be like just that. Like it's on Solana. There are a lot of people on Solana. There are a lot of new crypto enthusiasts on Solana. Like Messari, we just had like a class of like 11 interns of kids in college. And some of these guys had Phantom and they didn't have MetaMask. And so I'm like, what is happening? What is happening to the world? But there are a lot of new speculators that are going to be on Solana, and they're going to want a place to trade liquid perps. And I think Drift can deliver plenty of value by supplying that. It doesn't need to be, like I said, the amount of people that need the level of execution of a Binance, probably not a huge portion of crypto, probably even a less portion of who's on Solana. And so I think that there will be plenty of value in just having a product out there. And I actually really like what Drift is doing by launching a prediction market. I mean, everybody is launching a prediction market these days, but I think it's a great product, actually. And the early signs are encouraging. And so I think Drift potentially has that option of being a protocol DeFi super app on Solana. I think that was part of the memo as well. And I can buy that. But like you said, like I think if we're just trying to really test the limits of what is the best PerpDex product we can build on chain, fully on chain, HyperLiquid is doing that, and it's hard to do that on a general purpose blockchain. It just flat out is. I don't know if it's impossible, but it's just really hard to do. And so, if you ask anybody that trades, frequently, you ask them what they think about Drift, I think today they probably would say that it's not a perfect, it's not a perfect trading experience, but I think there'll be a lot of value as they continue to iterate on just being on Solana. But that's all I'll say there. I think it was a cheeky question, though.
So,
yeah, no, likewise.
Well, Sunny, it's been great talking to you today. I really appreciate your time, and I really enjoyed your report as well. So if anyone hasn't checked it out yet, Sunny is DeFi Monk on Twitter. So yeah, be sure to follow him and check out some of his reports and summaries of them, because it's really, really interesting, and one of the best analysts in crypto. So Sunny, thanks very much for joining us.
Yeah, I appreciate that. Love the podcast.